Welcome back to Buy Now, Sell Now, and of course the focus shifts to the earnings season, and a lot of banking earnings are also in focus, especially Bandhan Bank. Now joining us to dissect the overall earnings, how it has been, is there a MI pressure going on in the stock, why the asset quality has deteriorated, all these details would be coming in as Partho Pratim Sengupta, the MD and CEO of Bandhan Bank, joins us. The first question is, Parthoda, how's the performance for the MFI segment actually looking like? This has been under duress, and what do you think this segment will see a rebound? Will it be in this quarter, in a couple of next quarters, and how much impact has come from the guardrails as well?
Yes, so let us go a little bit past for that year. So last year Q1 was an exceptionally good quarter for the bank because all due to microfinance segment. There was a huge growth in this segment and a lot of disbursements took place. But as we all know that from Q2 onwards, that is from September quarter onwards, this segment has witnessed a lot of challenges and for which we have to take a conscious call of actually containing the growth of this EEB segment or the microfinance segment. Last year also we have degrown by almost 6,000 crores and we have anticipated that yes, okay, from March onwards also the Q1 and Q2 of the current financial year will continue to be a challenge in microfinance sector, and but we will be doing relatively better than the industry. So if you look at our books for the year, we have Y-to-Y we have degrown by 14.7% and also Q-to-Q we have degrown by 6.6% in this quarter for the year. So the growth, of course, now the what we have declined in the growth, that will obviously be arrested. So in Q2 we are expecting that we will be maintaining a stable book in this segment. Q3 and Q4 we are expecting a marginal increase. So our overall target to grow 8% over and above the March 25. Whatever we have shown in March 25. So that I think we'll be able to achieve.
All right. Hi, Mr. Sengupta. This is Kanishka also joining in. I wanted to understand from you, now for the first quarter, disbursements were also quite muted. Are you expecting any kind of improvement going forward, like Q2 onwards? How is the overall credit growth in the system at this point?
So, as you have seen that although there is a lot of liquidity in the banking system, the credit offtake is surely, I would say, a little bit muted. It is not that anything major thing that has happened. So it continues, the credit offtake almost remains at the same level for the day. So, but I think going forward now the inflation rates has also moderated and I think the rate cuts, the effect also the borrowers are getting from almost 75 basis points from this quarter for that day. So all this will definitely, and the festival season is also coming, so all this will definitely lead to a credit growth. That is what is our expectation for the day. And but microfinance, yes, Q1 I told that the challenges will continue in Q2 also. While my disbursements have definitely picked up than what was we have witnessed in the, I say December, Jan or for whatever we have witnessed in April, May or June for that year. From there the disbursements have picked up, but yes, it is yet to reach a sustainable level for that year. So, but the indications are there because the delinquency level is coming down. So my SMA 2 books, it has declined. SMA 1 has remained stable. So this is a good indication, I can say. So definitely I expect that this sector will improve from Q3 onwards.
Improvement coming in the sector for the third quarter onwards. But Partho sir, another question is that the SMA book, as you had mentioned, has come down, one of these parts, but the NPA, that has gone up. Why and where will these levels be as we move into FY26?
So we have our target to bring the NPA at around 4.5% by the year end for that year. So we are gradually moving towards it. But this month, of course, as I've said that because the microfin that whatever the SMA 2s were there in the last quarter, so many of them have slipped. That has resulted in a marginal increase, but more or less we have contained. So recovery efforts are there, and again the delinquency level has come down. So expecting at around 4.5% by the year end.
All right, Mr. Sengupta, let's also talk about rate cuts then. Now, how much of the rate cut has been passed on and how much is yet to be passed on? How is this exactly going to impact your NIMs? You have said that NIM will go down by 50 to 60 bips in the next 2 to 3 years. Now, it is already down 30 bips. So, how much more can we expect going forward?
So let me tell you that NIM will be moderated because we have already passed 25 basis point rate cut and another 75 basis point we have passed from July. So, but 2-3 positive points are there. First of all is that Bandhan Bank has cut down the deposits rates from April, and which has given me an immediate effect on the cost of funds by 19 basis point during this quarter. And going forward, the fixed deposits will get matured, and as and when this maturity takes place, definitely there will be further reduction in the cost of funds with the new renewals. So that advantage we are having it. This is the first thing. Number two is that my almost 50% of my books are still in the fixed rates, so which are not impacted by the rate cut. So that book will definitely give a stable income. And the third point is that as we are making more concerted efforts in containing the slippages, which is coming down, but it need to come down further, for which what we are working out. And if we can contain those slippages to around 3%, from the current level of 5% or 6% for that year, my NIM will further improve. So whatever the moderation will still happen considering all the effects, but I don't think that it will create a much impact on the profitability of the bank.
And Partha, so the credit cost is still elevated, coming in at almost 3.5%. So what will be the roadmap if you want to actually get towards that 1.5 or 1.6% mark over the next 2 to 3 odd years?
Yeah, so the credit cost, we have said that Q1 credit cost last time in Q4, we have said that it will be more or less the same, but thankfully we could achieve a little bit reduction. So 3.9, so we have come to 3.5. I hope that a further improvement will take in the front of Q2. So as of now, after reviewing the entire things, we have not changed our guidance. So we said that the credit cost at the year end would be around 2.5. We are still keeping that guidance. We are still hoping that Q3 and Q4, it will be substantially good if we can bring it down to around 1.7 or 1.8% for that year. Then overall the credit cost may be at the range of 2.5% what we have said. So we have not yet changed the guidance. We still are quite sure that we will be achieving at the year end a credit cost of 2.5%.
So the credit cost guidance, that remains same for now. But Mr. Sengupta, your company had also set a target of 15 to 17% CAGR growth in advances for the next 3 years. So will you stay with that guidance as well? And what about FY26 particularly? And apart from that, what will be the target for deposits?
We have set our, as I have told last time also, that we have set our target for advances and it is 15 to 16%. We are still keeping that guidance. So June quarter is always a relatively low quarter because last year June was an exception. But yet, if you look at my secular growth on the various segments, you will find that except for EB, where in the micro book where we have degrown by around 14%, we have grown almost everywhere. That is, our housing book has grown by 15%, our retail by 70%, and our wholesale banking has also grown by around 40%. So there has been a good growth everywhere, which I can say in respect of all the other segments, housing, retail and wholesale banking for that year. So this pace will continue, this momentum will continue, and as I have said earlier, we are expecting the microfinance book from Q3 onwards, it will definitely change. So our guidance for 8% growth in this microfinance book will definitely help us to achieve an overall target of 15 to 16% in the advances. And for deposits, we have said that we will outpace the growth of advances. So if I can able to achieve the growth pace in Q1, our deposits have grown much higher. It has grown almost by 16%, and which is more than the industry growth. But we will continue to maintain that pace, and definitely we will try to outpace the growth in advances in case of deposits also.
Well, interesting. The MFI stress might be bottoming out from the third quarter itself. Last time the company said that the bank is currently not taking CGFMU Insurance license, but is actively evaluating it for future use. Now, what is the update on the same? Any suggestive timelines for it?
So till now we are just examining because you see there are certain fine prints in the CGFMU scheme which is actually not beneficial for us. It comes with a cost, and so we are examining it for that year. Right now, of course, I can say that going forward what we will take in respect of the new disbursements for that year. So only after examination and actually thoroughly examining it, taking into the slippages rate, taking into account the cost of the premium and all other things, we will make a decision on it. So right now, yes, whatever the CGFMU claims we have lodged, we are just following it up so that we can get it at the earliest.